Hi traders, and welcome to my video on the kick-in candlestick pattern, or the kicker candlestick pattern if you prefer. So this is an easy candlestick pattern to spot on your charts. It can be either bullish or bearish. What we're looking for is a gap between the open price and the close price. And we're going to look to trade the momentum in the direction of the gap. Okay, so here I have a US dollar Swiss franc 1 hour chart. You can look for kicking patterns on any traded instrument, Forex, stocks, cryptos, commodities, indices, etc., and any chart time frame. Personally, I prefer the 1 hour charts and above simply because they contain more price data, and thus I find the signals tend to be more reliable. Okay, so the kick-in pattern is a gap between two candlesticks. Okay, so you see here where this candle closes and where the next one opens, there's a gap. Okay, so that's our kicking candlestick pattern there. Some traders may argue that the candle needs to be in the opposite direction, so they'd want this to be a bearish candle followed by a bullish candle. I'm not so fussy. For me, if I see the gap, I'm considering that a kick-in candlestick pattern. Yeah, so then how do we trade this pattern? Well, what we're going to do is we're going to look for a reversal trade. Okay, so that's the textbook way to trade it. And we can see here we have the higher lows. Okay, we've had the kicking candlestick pattern appear here, so we could place a trade on the breakout of either the previous high, such as there, and you can see on the next candle that's quite a substantial breakout candle. Okay, you could even trade a breakout of the high of the kicking candle itself. Okay, which would be there. But I personally would be looking at support and resistance. I just find them to be more relevant levels. Okay, you can see you've got the support there, resistance there. So breakout. As I said, this is a 1 hour chart, so this would look more significant if you honed in on the lower chart time frames. But a breakout to the upside there would be confirmation of that kick-in candlestick pattern for me. I'm saying some traders may trade them blindly. They may see the opening gap and then just want to buy straight away. Some may wait for the candle to close. If the candle closed bullish, just buy it again straight away here. Either way, make sure you've got good money management. Okay, so my stop loss would be below the low there. So you're looking around 15 to 20 pips on a 1 hour chart is not too bad. Profit potential over 100 pips on this particular move. You can exit when you sort of see this consolidation around here. You can see the market starts to make lower highs and lower lows. Could be a time to exit or consider exiting your position. You can use technical indicators as well to look for overbought market conditions. For example, we've got the RSI there. Once the RSI goes above or around the 70 area is considered perhaps the market is oversold. As you can see, it's not always set in stone because the RSI is overbought, overbought above or around the 70 zone here. As you can see, this candle pushed the RSI into the overbought area. However, price did continue further. But once we started to see the bearish divergence, that's the RSI making lower highs as well as the price. Could have been a good sign to exit along with these bearish candlestick formations as well. You can also use a trailing stop as price moves up to stay here. Lock in the stop loss at break even and start trailing the lows. Okay, just moving your stop loss up with the price, trying to maximize profit as much as possible. Just so when we do catch a good trade, we don't, leave too much on the table. We maximize each good move as much as possible. Okay, so that's a nice bullish kick-in candlestick pattern entry there. I've just noticed here there's another one here. This time we have got the bearish candle. So you see you've got the bearish candle there, gap between the bearish and the bullish candle. So this is another bullish kick-in pattern. Again, for the entry, we could use the recent resistance, which is here, and then trade on the breakout following on from the bullish kick-in candlestick pattern. You can see the resistance held up there. You've got a nice hammer, a bearish hammer there, but then price did break out above the resistance level. So this could have been a potential trade opportunity. Market was making higher lows. It's actually a wedge formations formed there as well. So this is why I don't trade I won't, for example, I won't say, okay, I'm only going to take a trade if I see a kicking candlestick pattern. I mean, if that pattern's not there and I see this breakout and that wedge pattern, I may just take the trade anyway based on the breakout. I mean, for me, support and resistance trend lines and price action analysis is all you need. In fact, just, well, I'll leave the RSI there just to show you potential exit as the RSI becomes overbought again around here. Could consider to certainly we would have trailed the stop loss to lock in as much profit as possible, but you might want to close part of the position. When you see the consolidation, you see the market making lower highs again. Can look to close the position around here. And again, bearish divergence on the RSI to the downside, all signals to perhaps exit around here. Stop loss below the low initially. So what's that? A 10, 15 pip stop loss and potential of 60 odd pips. Not bad risk to reward ratio on that trade. What I wouldn't do is panic around here and exit prematurely, just leaving too much on the table. Okay, so that's an example of two bullish kick-in candlestick pattern trades. Okay, so now we're going to look for a bearish kick-in candlestick pattern. Same thing, we're going to first look for a gap. So you can see here we have this nice bullish candle to the upside, but then we have a gap, and then we have this bearish candle down here. Okay. Good thing about this is we know that we're on a downtrend. The market is making lower highs. Okay, so we're going to look to short, following on from the bearish kick-in pattern. Timing entry, again, we can use the recent level of support resistance. This is actually a nice wedge pattern again. So we have this level of support here. We have our bearish kick-in pattern. This level of support holds up, is tested again on the next candle. Spinning top following on from that. Bearish spinning top as well. Lower highs and a breakout. You can see from that breakout there, it's quite a significant candle. Traders were watching this particular setup. It's actually a 3 inside down pattern as well, which is when you have a bullish candle followed by a bearish candle that is at least 50% of the bullish candle's body, and a third bearish candle that goes below the low of the initial bullish candle. So that's actually a 3 inside down setup trade as well on the breakout there. So that combined, you know, as I said, the spinning top, you've got a bearish hammer there formation, you've got the lower highs, breakout of support, the bearish kicking pattern. There's just numerous things. We don't need no magic indicators to tell us that this is a potential sell trade here. Had we taken it, we could have placed a stop loss above the high here. So what we're looking at, around 10 pips. There's nothing really for the 1 hour chart time frame. This would have been a decent move for around 40 odd pips, 40 to 50 pips, depending when you exited. I mean, when you start to see this consolidation here, you might have wanted to have taken some profit or close out the position. At the very least, what I would have done is as price fell, would have moved my stop loss to break even and just above the highs as price continued to fall. And yeah, this would have been a potentially decent trade. As I said, I would not only have taken that if there was a bearish kicking pattern. It just so happens that there is one. You know, there'll be other opportunities you can enter into. For example, when the market's making lower highs here, you could have marked off this level of support and you can see a nice breakout candle there. That would have been a nice trade earlier on in the trend. Same with this level of support here. Okay, you can see it's tested on multiple occasions. A nice wedge formation there and a breakout. No coincidence, again, we have these big candles. Traders are trading them. Okay, looking to get in on the trend early. Again, in terms of exit for this trade, had we have taken it, you can see the RSI does go oversold, to be fair. And it did show bullish divergence to the upside would have been a signal to perhaps start looking to exit the position. And so that's an example of a bearish kicking candlestick pattern. These are like good examples that I picked out. There will be times when there's gaps, and for example here, you can see there's a gap there. This could be considered a bearish kicking pattern, even though that's not a bullish candle. But if we would have entered it on a breakout of this support level here, unless we were quick to take profits, you know, price reverse back up. That being said, once we've seen that this happened, we could have exited the position, you know, either a break even or a small loss, because basically the trade hasn't worked out. This level of stop loss has held of support is held firm, so we just want to see what happens following on from here. Or we could have just had our stop loss around here and just waited for it to play out. There, we're not going to win every trade. As long as we can cut losing trades short and let winning trades run. Another argument against this trade would perhaps be this strong bit of consolidation around here. Okay, we might just prefer to have found a trend and to trade these kicking candlestick patterns with the trend. I think it's also worth pointing out, I can see there that level of support we mentioned earlier actually becomes resistance here. Okay, so it's another strategy altogether, but if you were paying attention to this level of support, let's say you took the trade on the breakout down there, and then you were looking to re-enter, you could have traded a reversal trade bouncing off the resistance here, but this is more of a range trading strategy, if I can get my words out. But yeah, I prefer to trade with the trends and capture big moves. As I said, if the bullish kicking pattern happens to appear with a trade I'm taking, yeah, happy days. It can be extra confirmation, but it's not the be all and end all. I'm not going to just design my whole strategy around a particular candlestick pattern. I'm just going to look to draw trend lines and trade support and resistance. For example, here, trend line, I can see the market's going up. Okay, I'm going to draw resistance there. Nice wedge pattern and a breakout. You can see from that big candle that was a good breakout trade there. Didn't need no magic indicators. In fact, the RSI would have said it was overbought, and that may have prevented some traders for, well, no, to be fair, it was an okay entry there based on the RSI, but you can see price continued up. This would have been a good entry, and I didn't need no unicorn indicators for that. Although the RSI is showing bullish divergence, which means the market is moving up. Although my eyes would have told me that just by looking at the chart, but I'm going off on a tangent here. That's for another video. I do have lots of videos regarding various ways you can enter into big long-term trends for big moves and big pips. Okay, if you could like and subscribe, that'd be great. Thanks for watching, and I hope to catch you on the next one.